Hey everyone, it's Rob Folia, broker with Exit Real Estate Experts and author of Real Estate Reset. And I wanted to come to you today because not only is it early June, it's the first work day of June, but honestly, I'm seeing some trends in the real estate market that I want us to check out. I want us to review and say, is this actually happening? What are we seeing right now? And so, without further ado, let's pull up the real estate market and go from there. Um, as always, before we jump into what's happening locally, I want us to stop for at least 30 seconds here and just look at interest rates. We have talked about interest rates for years now on these videos, so I don't want to spend too much time on them. As you can see, I mean, the 30-year fixed rate, according to Freddie Mac, is still hovering close to 7%. I don't see that changing anytime soon. I mean, the reality is it's toward the high end of the 52-week range, but it's also been toward that high end of the 52-week range for the last, gosh, I mean, it crossed 6.5 here in end of October last year. So what is that, like 7, 8 months, something like that? I just bring this up because rates, in my opinion, have very much stabilized. That's helped the market become relatively stable, and yet there are some things I'm seeing, and we're going to get into that in just a second. Point being that what I want to bring up is that for anybody out there who's thinking, "Hey, I'm going to wait until interest rates drop," I just don't know about that. I mean, we don't know when that's going to be. I mean, it could be 5 years from now if they ever do drop, lower than the sixes. I mean, who knows? I mean, if you went back and looked at the historic numbers here, I mean, they had never dipped really below five until where are we here? If it would load properly, somewhere around 2009 when we were in the biggest recession of most of our lifetimes anyway. And so I just bring all this up because no one knows the future. And for anybody who's out there who's trying to time the market, especially with interest rates, there's just no way to do it. I mean, there's just not. I honestly believe we're going to be hovering around this number, around 7% for the foreseeable future. And that's not a bad thing. If anything, it helps keep things stable. But speaking of stability, let's look at the market. I wanted to start with, I normally like to look at a general area, but today, for some reason, I just picked a town. I picked Nolensville. And I wanted to start, in fact, we'll start with the snapshot here more than anything, because this line that you can see here, the average sales price, I saw this dip 12%. Now, the reason I like to look at a bigger area most of the time is because when you look at a smaller pocket, whether it be a town like Nolensville, where closings last month, there was only 39. I mean, 39 is not three, so it's a relatively decent sample size, but it's not 300 either. So when you're using a sample size of only 39 homes, you might see some trends that are abruptly going up and abruptly going down, up and down, just because it's a smaller sample size. It is what it is. But when I saw this number just really stood out to me, I should say. The median sales price and the average sales price, both you can see are down considerably, 13%. Um, while months of supply it's up, but it's not up terribly. I mean, it's still a seller's market according to real estate economists. I mean, 5 to 7 is balanced. If we're less than five, it's still a seller's market. So, let's see what exactly is going on. Now, before we even look at the numbers, I will say one thing that I'm seeing that some of this could be the fact that builders and some people are just reaching too high for pricing. I mean, Nolensville average price being over 1 million is to me it's unfathomable. If you went back and told me this 10 years ago, I'd be like, that's unfathomable. That's ridiculous. But it is what it is. That's what the average listing price is. But you can see the average sales price and median sales price, they're a lot different than that. Let's just start by looking at the timeline for the average sales price. Now, I've got pulled up here a 1 year trend, and it's calculating monthly, meaning you're gonna see each one of these dips very clearly. It's calculating the March average sale, the April average sale, May, etc. Whereas if we look at, say, a 6 month rolling, it's taking all these numbers into consideration. It kind of rounds out the curve a little bit, and this is why I wanted to bring this up. Because when we see a smaller market, like say in Nolensville, smaller compared to say Nashville, of course, and we see, when we see these jagged numbers right here, I usually don't get concerned over it because just like home prices from September to October didn't drop from 1.05 million to 930,000 in 30 days. It didn't drop by 10 or 11% in 30 days. Typically, it's not going to rise like that either, as you can see here from November to December. It usually doesn't rise like that either. But the sample size will make it look like that. What I'm trying to get at, and this is my long-winded way of saying, usually when we see this, it's because it's a sample size issue. It's not a huge market fluctuation issue. Market fluctuations tend to happen a little bit more over time. And that's why I'm pulling up the 6 month rolling, because when I see kind of a pretty steady downward trend here, really, if you go back to December, I mean, yes, it went up a little bit from December to January, but barely, all the way through May. I mean, that's a 6 month sample size that we're seeing. And we're seeing, I mean, from December 973 for an average to 882. That's a pretty substantial drop. Gosh, I mean, I don't know what the math is off the top of my head, but that's probably about 10%, 9 or 10% of a drop in 6 months. That's pretty big. I bring this up now. Some of this could be, numbers were artificially inflated. So, again, it's an average. It's a small sample size. But I am curious, and I want to pull this up, kind of live to tape, so to speak, and see for other areas, other markets, bigger markets, see if it's doing the same thing. So again, when we look at this snapshot, 39 closings in Nolensville for last month. So not a huge number. Let's just pull up Nashville and let's just run the report for Nashville. So you can see, I mean, it's all 15, 20 times the sample size, 509 closings last month. Now, down significantly, by the way. That's a huge gap, down 21%. But let's look at this number specifically. Ooh, this is another one I want to point out. Wow. Before we even look at the other one, months of supply, hitting 5 months of supply. That's huge. I mean, when we look at the timeline here, I mean, this is something that oh, come on, load. Let's just look at a monthly standpoint. I mean, this highest we've seen since January, which was the highest we'd seen in a long, long time, but it's just starting to creep up, man. That's a big thing. But here's again, this is the point of the video, the sales prices. You can see sales prices rose 4% in Nashville. Now let's look at a 6 month rolling. I just want to see if the general curve is the same as what we were seeing in Nolensville. Again, Nolensville, smaller sample size. I usually don't get super concerned over it just because it's a smaller sample size. And no, you can see right here, while it did dip a little bit from the end of last year into the beginning of this, it's gone up substantially here. I mean, from February 812 for an average to May, 846. That's what 30,000, 4%, 5%, of a difference there between, in just a few months. So that's definitely a good sign. Let's make sure it's not just a Nashville thing. Let's just pull up another larger spot, like maybe Murfreesboro. See what we get here from Murfreesboro. Pricing trend. Well, that's interesting. All right, let's look at let's look at the snapshot first before we dive too deep into there. Months of supply is still 3.5, so still a solid seller's market. But you can see big jump right there, 2.1 to 3.5. I mean, or 3.4. Like that's a pretty big jump year over year. Closings down 17%. That's pretty significant too. Sales prices though, again, it's a rise. That's a good thing, for all homeowners that are out there. But when we look at this 6 month rolling, the interesting thing is this curve is kind of going down a little bit right here. Now that's small, again, small area. That's only from March to May. That's not huge, and the drop is not huge either. 518 to 511. I mean, that's almost stable. When we look at a 1 month rolling, you can see it's actually going up here since February. And so maybe that dip in February is throwing the numbers off. But hey, that's still interesting. I mean, that's something that I wanted to make sure we explored. Let's just look at one other large area. Clarksville is another good one just to check out, just because it's got a large sample size. You can see closings down 21%, by the way, year over year again. So that's a trend that we're seeing basically city after city after city. Other thing, months of supply. Look at this, from 3 months to 4.5. That's another substantial jump. Now average sales price is up. That's definitely a positive sign. Let's just look at the 6 month rolling again. I mean, you can see it's a steady increase from the end of last year. So a good thing. So maybe it's just a Nolensville thing. It could also be at the general price point, but Then again, Nashville had a high price point too, just like Nolensville. So it could just be a Nolensville thing, could be a smaller sample size thing in Nolensville. So I wanted to explore all this live with you to show that how all these micro markets can kind of change. Now, one quick thing that I want to make sure to point out to everybody here. The reality is nobody can tell the future when it comes to real estate. Like any economist, any expert that's going to tell you, hey, the market is going to do this in the next 6 months or 12 months, they don't know. Nobody knows. Nobody knows the future. But I wanted to jump on here and share this stuff with you because I'm seeing a lot of volatility. You can see how months of supply and all those, I believe every single one of those months of supply had gone up. Some were still very, very low. Like was it Murfreesboro, 3.5 months of supply. That's still a very solid seller's market. But some of those were encroaching into balanced market territory. We're not deep enough into the season yet to where I'd say like, hey, it should become we should see more inventory. Like, no, right now it should be like peak time for sellers. We just finished out May. The busiest months of the year around here are usually May and June and then July, closing out into July. So seeing all that makes me say, hey, there might be some volatility on the horizon. Just beware of that. If you have somewhat immediate real estate needs, like you're thinking in 6 months, in 12 months, I want to sell. If you can push that timeline up, I might recommend it just because obviously we don't know the future. Nobody knows what things are going to look like in 6 to 12 months. But in my opinion, those are signs that say there could be some decent changes to our market in 6 to 12 months. And so reach out if you have any specific questions. I'm happy to run through your scenario with you. That could look like a lot of things, could just look like a market analysis. It also could look like a full-blown listing consultation so you can get an idea of what listing your home looks like. And so just reach out. If you're seeing this through email and you have a question, hit that reply button. As always, you can text me or call me 615-238-7578. If you're seeing this on social, please hit like, please comment. It helps with engagement. It helps get this message out to more people. Thank y'all so much for checking this out. And I'm sure we'll talk soon. See y'all.